Welcome to the Markets Watch section of Financial Markets. I'm your host, Victor Chiberan. We have had quite an eventful week in the space of financial markets performance within the East African region. We're yet to see how this week is going to close in terms of trading, and hopefully within today's trading session we're yet to see companies competing for the first place and making their investors happy. But while that is still in place, we're looking at yesterday's trading sessions, and both on the Uganda Securities Exchange as well as the Nairobi Securities Exchange, and it is to understand how the local companies are faring up, as well as the cross-listed entities as well. But to start with the Uganda Securities Exchange, in terms of yesterday's trading session, we're looking at a total of 3,800 shares, corresponding to a market value of 646,000 Ugandan shillings. Now, that was what was traded in yesterday's trading session, and compared with the previous data, we're looking at a 91% decline in volume, as well as a 91% decline in turnover. But all this leaves our market capitalization at 19.7 trillion Ugandan shillings. Now, only a single equity traded in yesterday's trading session, and we ended with 3 gainers as well as 4 losers. Nation Media Group led the gainers with a 1.18% share price appreciation, closing at 486 Ugandan shillings, and that is per share. But it was closely followed by Centum Investments, which we're also not surprised to see Centum closing this week among the top gainers. It has been quite a twist and turn for it all throughout the week, but hopefully in today's trading session, Centum might be able to maintain its position among the top gainers. It went up by 0.38% and was closely followed by KCB Group, that also went up by 0.16%. Now, KCB Group hasn't been showing any movement on the Uganda Securities Exchange as of the previous trading sessions, but has been showing some noteworthy performance on the Nairobi Securities Exchange. But just for context, KCB Bank Uganda Limited is actually a subsidiary of the Kenya-based KCB Group, and it is a commercial bank within Uganda. The bank opened for business in November of 2007 at Commercial Plaza, and that is along Kampala Road. But KCB Bank offers fully fledged universal banking products that are tailored for the Ugandan market, while taking advantage of the emerging regional investment opportunities. So this is all in order to support inter-regional trade within East Africa. But KCB Group is listed on the Uganda Securities Exchange under the ticker symbol KCB, and it has been so since October 19th of 2010. More information on their international securities identification number can be found on the Uganda Securities Exchange website for more information on how this equity is performing. But in terms of numbers, we're looking at shares outstanding of 2.98 billion and market capitalization standing at 2.7 trillion Ugandan shillings. The current share price is at 904.68 Ugandan shillings per share, and KCB closed its last trading day with a share price of 523.06 Ugandan shillings per share. This is recording a 73% gain on that very price valuation, and it is ranking it first on the Uganda Securities Exchange in terms of year-to-date performance. Now, in this case, investors should, however, take caution of KCB's most recent poor performance, and we're looking at it having lost about 13% of its value in the past 4 weeks. So, looking at the numbers, we're looking at all the way back from 11th 8th November of 2021, and we're looking at a volume of 296, but a share price of 1,503.12. Now, this is obviously recording no change, but we're yet to see more performance coming in from KCB. We are waiting hopefully to see KCB maintain its position within the top gainers as today's trading session goes by. But looking on to the losing side, Equity Bank came out last with an end of day price of depreciation of 1.73%. Now, this obviously led it to close at about 1,196.19 Ugandan shillings per share. It was followed by Kenya Airways, and Kenya Airways also went down by 0.31%. Jubilee Holdings also went down by 0.17%, and East African Breweries also had a price depreciation of 0.14%. MTN Uganda is the traded entity, the only entity that actually recorded trading shares as of yesterday. But shifting our focus onto the performance of the market indices, we obviously start with the All Share Index, which is the benchmark, and it actually shed about 3.60, which is a depreciation of about 0.35%. Points to close at about 1,019.66. Now, this was representing a one-week loss of 1.11%, a four-week loss of 4.95%, but an overall year-to-date gain of 16.87%. The local company index also maintained its value at 259.13 points, and this was making it a one-week loss of 0.5%, a four-week loss of 1.45%, as well as a year-to-date loss of 4.68%. Now, we're seeing the local company index keeping its position, while the All Share Index coming down in terms of price, in terms of points to close. But today's trading session has already, today's trade has already begun, and we're yet to see companies coming up within the top gainers, new companies, as well as our usual ones. Let's also notice that Stanbic Bank hasn't shown any trading volume and hasn't appeared in any of the top gainers or bottom losers, which is quite concerning. But hopefully diving deeper into the company's recent financial reports will give a brighter point of view on that issue. But that is what is going on within the Uganda Securities Exchange, and would want to shift our focus to the Nairobi Securities Exchange to also understand how it is performing and how these cross-listed entities are also showing power on that end. But looking on to the most recent trading session on the Nairobi Securities Exchange, we were looking at a total of 15,024,100 shares in about 928 deals. Now, this was corresponding to a market value of 298,783,218 Kenyan shillings, and that was what was traded in the previous trading session. Comparing this performance with the previous performance, we're looking at a data of the data is actually showing 16% decline in volume, but a 2% decline in about a 2% increase or improvement in turnover, as well as a 5% decline in the deals. But this is leaving the market capitalization at 1.7 trillion Kenyan shillings. So in aggregate, we're looking at 39 Nairobi Securities Exchange listed equities participating in the trading, and we ended with about 17 gainers as well as 14 losers. Britam Holdings led the gainers with 9.62% share price appreciation, closing at about 6.38 Kenyan shillings per share. It was followed by Nation Media Group that also went up by 8.36%. Longhorn Publishers also went up by 7.43%, and Home Africa went up by 3.23%. Now, we would want to also see what a company like Home Africa is particularly engaged in, and how it is being able to come up within the top gainers winners in the last trading session. But Home Africa Limited is actually Kenya's only publicly traded property developer, and Home Africa plans to expand into 6 African countries starting from 2014. So the company will construct homes in Tanzania, Rwanda, Angola, Zimbabwe, Nigeria, as well as Ghana. And the new markets will be covered by regional offices in Nairobi, Johannesburg, Abuja, and Karuri. So Home Africa Limited is listed on the Nairobi Securities Exchange under the ticker symbol HAFR. And more information on their international securities identification number can be found on their website. But looking into the numbers, Home Africa is currently the 60th most valuable stock on the Nairobi Securities Exchange and holds a market capitalization of about 130 million Kenyan shillings. This is about 0.0076% of the Nairobi Securities Exchange equity market. Now, looking into the shares outstanding, we're seeing about 405 million, and the market capitalization also still stands at 130 million Kenyan shillings. Their current share price is at 0.31 Kenyan shillings per share, and it closed the last trading session with 0.32 Kenyan shillings per share. Now, this is recording a 3.2% gain over its previous closing price of 0.31 Kenyan shillings per share. Home Africa began the year with a share price of 0.37 Kenyan shillings, but has since lost about 13.5% off of that price valuation. This is ranking it the 52nd on the Nairobi Securities Exchange in terms of year-to-date performance. Now, shareholders' worries in this case are actually compounded by the fact that Home Africa has lost about 11% of the stock's value from June 5th to date. But Home Africa remains the 21st most traded stock on the Nairobi Securities Exchange and has been so over the past 3 months. So Home Africa has traded a total volume of 3.65 million shares in about 903 deals valued at about 1.25 million Kenyan shillings, and that was over that very period. This is leaving us with an average of 57,922 traded shares per session, a volume high of 310,400, and that was achieved on April 15th, as well as a low of 100 on June 7th of that very same period. Now, hopefully Home Africa will be able to maintain its position among the top gainers as the trading session goes by. But regarding the performance of the market indices, the benchmark shed about 0.32, coming down by 0.29%. points to close at about 108.68. Now, this was representing a 1-week loss of 0.31%, a 4-week loss of 4.2%, but an overall year-to-date gain of 17.99%. Other remarkable indices that performed were actually the 10-share index that also went down by 0.3% and leaving a 0.41% 1-week loss, as well as a year-to-date gain of 21.95%. The 25-share index also went up by 1.08%, leaving a 1-week gain of 1.48%, as well as a year-to-date gain of 11.03%. Now, the 25-share index also went down by 0.09% and leaving a 1-week loss of 0.26%, as well as a year-to-date gain of 19.3%. Now, we're seeing all these other indices performing apart from the all-share index, and the all-share index's poor performance could very easily be attributed to the cross-listed entities failing to add up with within the time range But looking onto other indices, it shows that the local companies are actually showing some performance, and hopefully by the end of the week, by the end of today's trading session, we will see some noteworthy movements from their share prices. But otherwise, that is the general analysis coming in from the Nairobi Securities Exchange. And looking on to some other cross-listed entities that are on this market, we want to see Centum Investments, which still stands at 8.70 as the share price. It didn't show any movement, which is also very normal, but on the Uganda Securities Exchange it did show some movement, so shareholders can also compound their worries basing on that very fact. Diamond Trust Bank Kenya stands at 46 Kenyan shillings per share. It went down by 0.20 in terms of share price, and it recorded a trading volume of 300. Equity Group stands at 42 Kenyan shillings per share and recorded a trading volume of 5,500, and it also went up by 0.20 in terms of share price. We saw Home Africa and Jubilee Holdings still stands at 170 Kenyan shillings per share without any increase or decrease. KCB Group is showing a 0.4% increase, leaving their share price at 32 Kenyan shillings per share, and recorded a trading volume of 24,400. Now, looking into other cross-listed entities and on the Nairobi Securities Exchange, Nation Media Group also did show any movement, but leaves the share price at 18.15. East African Portland and Stanbic Holdings. Stanbic Holdings actually went down by 0.5, and it left their share price at 113 Kenyan shillings per share. This is leaving us with a trading volume of only 200. Sanlam is at 5.66 Kenyan shillings per share. Total Kenya is at 20 Kenyan shillings per share. Uchumi had a trading volume of 1,300 and leaving their share price at 0.19. But Umeme is at 14.70, which is in terms of share price, leaving our volume at 200 and recording a decline of 0.10%. But hopefully we're yet to see more noteworthy movements coming in from the cross-listed entities. That will be a big saver, especially for the all-share index on the Nairobi Securities Exchange and also on the Uganda Securities Exchange. But let's not forget that on the Uganda Securities Exchange, we had the British American Tobacco standing with its price at 15,000 Ugandan shillings per share. Airtel Uganda is still at 70, and it didn't show any movement. Bank of Baroda, which normally records trading volume, didn't show any trading volume as of yesterday and was left at 20 Ugandan shillings per share. DFC is at 225 Ugandan shillings per share. East African Breweries is at 4,085.42. Equity Bank is at 1,196.19. We're looking at Kenya Airways coming down by 0.34. MTN Uganda didn't move in terms of share price, but their share price stands at 170 and showed a trading volume of 3,800. New Vision also still stands at 153. Quality Chemicals is at 55.50. Uganda Clays is at 12, and Umeme is still at 460 Ugandan shillings per share. Now that is the general analysis coming in from the financial markets within the East African region. We still have more to offer you in terms of news affecting the performance of these entities across the borders, but we'll be right back after a short break with more insights on that.
Smart 24, driving business.
We've been through a lot. The only reason why we are still standing is because we're the Kirundas. And therefore the need to keep that name and legacy alive.
There's something you're not telling us.
What are you talking about?
So you knew about the people that killed Teresa and you kept it to yourself?
Lucy, the last time we did not do it properly.
Amanya gange nze Namutebi Sharon nga nkolera wano wennyini Saka Kirombe oba Makindye. Empangula gye nawanguddemu ssente mbadde nga nkozesa mobile money nga nsindika school fees w'omwana ku ssomero. Okutegeera nti mpangudde nze mutima neegambye nti kambalinde bamale okujja ndyoke nzikirize nti mpangudde. Kyenyinza okubagamba nti si byabafere weewaawo abafere gye bali naye ennamba eri emu yokka era bw'eba ekukubidde omanye eyo si yabafere. Mpulira bulungi nnyo 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 era ndi musanyufu nnyo. Naye MTN mobile money mbebaza nnyo mwebale nnyo mwebalire.
Together, we're unstoppable.
This is Jordan. When it comes to classwork, Jordan is magic. Jordan shines. Jordan makes his peers better. Jordan is a true leader. White Star Magic family. Be a leader. Be magic.
Luxury redefined at Seasan Hotel as you indulge in the splendor of elegant living fit for the royalty that you are. Step into comfort, pampering and blissful customer-centric service as you select from our range of comfy exquisite living quarters furnished to meet with your royal preference. Surrounded by scenic beauty, our tropical setting allows you to escape the glamorous ordeal of city life. Our ambient green gardens will guide you to a place of revitalizing rest. The 3-star restaurant caters to your palate, serving your choice menu ranging from exotic cuisines to local delicacies. Our chefs will serve you full course meals for a truly out-of-this-world culinary experience. Our fully stocked bar to whet your throat, from renowned global brand whisks, brandies, gins, beers and wines to our locally celebrated beverages, you will not lack for any brewage. It's an all-new experience in the East at Seasan Hotel. So visit today at plot 15 to 19 Spire Road, Ginger, or contact us on +256 751 719 960 and +256 785 354 614 for reservations. Seasan Hotels, luxury redefined.
Cooking oil like no other makes your meal so sweet and scrumptious. The taste of Uganda, yeah, the taste of Uganda, the taste.
Smart 24, driving business.
Welcome back from that short break. Now, we're obviously supposed to be heading into headlines of news that has been affecting these entities and their performance. But of recent, we've seen Kenya Airways coming down in terms of share price, and one of the major points we have as of today is Uganda Airlines allocating about $95 million to promote local purchases. Now, we want to know if this is a smart move, or they're yet to regret making a decision like this one. But Uganda Airlines plans to spend about $95 million on procurement during the 2024-2025 fiscal year, and exploring and is actually exploring ways of supporting local suppliers to earn a bigger slice of that spend. The money will be split among supplies, services, and works. So the national carrier also expects to hit about the 700,000 passenger milestone at the end of 2024 on the back of capacity and frequency growth on key routes. So the numbers were actually announced this week as the carrier's first supplier forum in Kampala, during which local suppliers were taken through existing and emerging opportunities at the flag carrier. So according to the Chief Executive Officer, Jennifer Bamuturaki, the local supplier database has actually grown to 200, and it is about 120 billion Ugandan shillings has been paid in local contracts over the 5 years that the airline has been in operation. She, however, also lamented the challenges with equality and consistency, and a barrier that has often forced the airline to foreign source products that could be produced locally. But local suppliers need to think becoming globally competitive so that their growth can also support the carrier's cargo operations and national export base. That is according to their CEO. And the demand for onboarding consumables, 90% of which are sourced from local suppliers, is increasing as the airline grows its network and passenger numbers increase, she says. So according to provisional numbers, the Uganda Airlines expects to report about 480,000 passengers carried during the fiscal 2023-2024, and the full year number for 2024, however, is expected to be about 700,000 passengers. So the growth is accruing from network development, which is now standing at about 13 destinations, and increase in frequency on key routes, and capacity growth through up-gauging aircrafts on regional routes. So in May, the airline added at least 156-seat A320 to its fleet. So the aircraft has enabled the carrier to tap into growing demand on routes such as Nairobi, Kinshasa, and Johannesburg, while creating room for frequency. And also, looking at the start of July, Nairobi, which is served 16 times a week, will increase to 2 flights a week. And about 3 flights a day for 6 days for the week except Saturday. And Kinshasa will increase from 5 to 6 days a week, while Juba will actually have double daily flights for 4 days, taking the weekly total to about 9 flights. Dar es Salaam has been decoupled from Zanzibar and will now operate daily from current 5 weekly flights, and Zanzibar will now be coupled with Kilimanjaro, with both destinations served 3 times a week. We remain committed to, they actually stated that they hope to remain committed to working with their clients to expand the range of products that they can supply in competitive terms. But they're also looking at growth which is by transforming into globally competitive companies that can supply quality products, not just Uganda Airlines, but the global legacy airlines. So they'll actually need to concentrate effort on improving quality across packaging consistency and in taste and supply, according to their CEO. So she added that the company, which is actually looking to launch a dedicated freighter service, sees success of its suppliers as integral to its own sustainable growth, because we're looking at them having to help fill the cargo capacity. And she also pointed them to new growth areas, such as participating in sustainable aviation fuel value chain and first by planting a feedstock for energy companies. We're here to see how that is going to go on for Uganda Airlines, and also how it's supposed to put them on the map in terms of competition with other African airlines that have been in the business for a while. Other headlines, we're looking at prices of Kenya's imported second-hand cars falling, and as one might immediately attribute it to their political environment as we speak. The Kenyan prices of some popular brands of imported second-hand cars have actually dropped by double digits between January and this month. This is driven by the shilling's rally against the dollar, and dealers said that prices have been easing since the start of the year, offering relief to price-sensitive Kenyans who opt for the used units. So the official exchange rate from the Central Bank of Kenya shows that shillings exchanged at 128.67 units to the greenback, compared to 160.8 units as of January. And a 2017 Land Cruiser Prado TX, for instance, now goes for about 4.5 million Kenyan shillings, which is about $0.036 million, and it is compared to about 5.3 million Kenyan shillings, which is about $0.0424 million at the start of the year. Or we're looking at a 17.7% drop, while a used 2017 Subaru Outback is now retailing at about 2.5 million Kenyan shillings, which is about $0.02 million US. Now it came down from 3 million Kenyan shillings, which is about $0.024 million in January, which is about a 16.6% drop. Price drops offer relief to Kenyans who had been forced to shelve purchases of second-hand cars last year when prices skyrocketed amid the shilling's war against the dollar. So prices have gone down because of the shilling's recovery against the dollar. And Cindy Ndeda, the marketing manager at the Kenyan office of SBT Japan, said that they have seen price drops as a result of how the shilling has gained against the dollar. So Kenya Auto Bazaar Association Secretary General Mr. Charles Munyori also stated that the dollar is the currency used in Kenya to pay for imported goods, so including motor vehicles, fuel and furniture, and a strengthening of the shilling has the impact of lowering the cost of the imports. An official at Vozilo Motors, another car dealer in the city, also said that prices of the units had dropped, singling out the Nissan Note, which now goes for about 850,000 Kenyan shillings, which is about $6,576 US, down from 1 million Kenyan shillings, which is about $7,736 US at the close of the year. A Mercedes-Benz C200 is going for about 3 million Kenyan shillings, which is about $23,210 US, compared to the 3.5 million Kenyan shillings, which is about $27,079 US, while a Nissan X-Trail is retailing at 2 million Kenyan shillings, which is about $0.016 million US. It dropped from about 2.2 3 million Kenyan shillings, which is about 0.0184 million US dollars at the start of the year. Now, falling prices offer a major boost to dealers who have since last year grappled with low sales as prices of the units soared in the wake of the shilling's wars against the dollar. Now, the shilling had been on a free fall since 2021, directly affecting prices of imported goods, and looking at cars and petroleum products in this particular case. So prices of the second-hand cars have had actually surged upwards of about 600,000 Kenyan shillings in the last 4 months of 2023, underscoring the impact of the shilling's wars. So dealers had earlier projected that prices of imported second-hand cars would drop in the wake of the shilling's rally against the dollar. So Japan is the single biggest source of second-hand cars in Kenya, with the popularity of the units driven by their low prices relative to the new cars. So second-hand cars are popular in Kenya due to their low prices compared to the new motor vehicles, and the United Kingdom is another source of used cars imported into Kenya. So Kenya allows importation of second-hand cars within an 8-year age limit, and this is meaning that used units that were manufactured before 2017 are barred from being imported into the local market. Now, hopefully, by any kind of news coming in globally about the movement of the dollar, any effect it will have on the Kenyan shilling might also cause those prices to move in just a couple of hours. So we have to keep an open eye about that as well, to see how it will end up for the Kenyan used car market. But we're seeing so many other headlines affecting the performance of these entities. We're looking at the oil situation and Uganda oil imports land, and ending Kenyan fuel farms, fuel business. That scare has been around since the start of the debate of Uganda importing its own oil and its effect on the companies that are within that particular sector. We're also looking at equity pilots insurance in DRC ahead of regional rollout, and that is also expected to provide key lessons before the insurance services are launched in other subsidiaries. Tanzania also zooms ahead with new electric trains, and it is called the Express service, and an express train is set to be launched on Friday, which is today, which is from Dar es Salaam and Morogoro, easing the travel time from 4 hours of bus to just 1 hour and 40 minutes. Northern Corridor states push for shorter Tanzania flights, and the Secretariat Northern Corridor Transit and Coordination Authority is tasked to initiate talks with Tanzania over that proposal. Here to see also how that affects business within the East African region. And also we saw at the start of the week the EY Kenya reputation being at risk of the World Bank sanctions. So this week is closing with quite a number of heavy headlines, and hopefully by the start of next week we'll be looking at so many things, so many companies reacting either positively or negatively from those price movements. But shifting our focus to the global analysis and how business has gone down globally, we're looking at global stocks at a record high before the US jobs data, and that is in terms of the market wrap. So we want to understand how that is coming about, and also this is bound to affect the dollar's performance in so many countries whose currencies are directly affected by the movement of the dollars. But global stocks traded at all-time highs before crucial US jobs data that is expected to show some moderation in hiring. So the pound added to its longest winning streak in 4 years as the Labour Party swept to power in UK elections. So a series of soft US economic data has revived hopes that the Federal Reserve will start cutting interest rates as soon as September, pushing the MSCI Incorporated World Index to a record. And European stocks rose for a third day and Friday, which is today, while the US equity futures pointed to slight gains when trading resumes on the Wall Street after the holiday. So given other evidence of a cooling economic backdrop, we're looking at weaker ISM manufacturing PMI and ISM service sector PMI reports. Also, we're looking at the payroll report that could be increasingly decisive for the Fed as it seeks a rationale to signal an easing of rates. And that was according to Quincy Crosby, the chief global strategist for LPL Financial. And the UK's FTSE 100 stocks index rose and the pound strengthened for a seventh day after the Labour won a majority of seats in Parliament, giving it a clear mandate to deliver on its pledge for greater economic stability. So Keir Starmer's party passed 400 of the 650 seats in the House of Commons, and it was securing its long-predicted landslide victory. A clear majority could bring some much-needed stability to the UK political landscape at a time of heightened global uncertainty. And that was according to Samuel Ziff, the head of global FX strategy at JP Morgan, a private bank. And that could provide a bit of a catcher for the pound, according to him. But France's CAC 40 also rose for a third day following indications that Marine Le Pen National Rally Party will likely fall short of an absolute majority in second round elections this weekend. And still, no matter which party comes out on top of the French parliamentary vote, some investors are betting it marks the beginning of a more turbulent period for the country's stock and bonds market. The CAC 40 has been the worst performer among major European stock indices since the snap election was called last month. And while at the height of the sell-off, a metric of bond market risk soared to its highest since the sovereign debt crisis. An index of dollar strength fell for a fourth day, while treasury yields were steady, and traders looked ahead to the jobs report due later. And payrolls probably rose by 190,000 in June, a step down in hiring from the previous month, according to the median estimate in a Bloomberg survey. So average hourly earnings likely increased by 3.9% from a year earlier, and the least in 3 years. So the unemployment rate is seen holding at 4%, and the highest level is more than 2 years. So in Asia, we're looking at Japan's Topix index briefly touching another record on earlier today, having surpassed their previous high set in 1989 in Thursday's session. And Chinese stocks have fallen for 7 straight weeks, the longest losing streak since early 2012. And as investor sentiment continues to weaken ahead of a key policy meeting this month, the yen strengthened for a second day on Friday against the greenback to rebound further from the lowest level since 1986 reached on Wednesday. And we're looking at China's central bank taking the next step towards selling government bonds to cool a record-breaking rally, saying it is now having about hundreds of billions of yuan of the security at its disposal through agreements with lenders. Oil traded near a 2-month high as Hurricane Beryl portended potentially worse storm season, while shrinking U.S. crude stockpiles, and it hinted at improved demand. So gold, on the other hand, headed for a back-to-back weekly gain, and Bitcoin fell to the lowest levels since Fridays since February. But as this week ends, we're looking at the Eurozone retailing sales, which is happening in London time. S&P 500 futures rose by 0.1%. Nasdaq 100 rose by 0.2%. Futures on the Dow Jones Industrial Average rose by 0.2%, and the Asia Pacific Index was unchanged as of yesterday. Emerging markets also rose by 0.2%. Looking at currencies, the Bloomberg Dollar Spot Index fell 0.1%. The Euro rose by 0.1% to about $1.0825. The Japanese yen rose by 0.3%, coming up to 160.80 per dollar. The offshore yuan was little changed at about 7.2885 per dollar. The British pound was also a little changed at 1.2770 US dollars. Cryptocurrencies, Bitcoin fell 7.1% to about 54,171.71, and Ethereum fell about 9%, which is at about 2,861.38 US dollars. We're looking at commodities. Brent crude fell by 0.1%. Spot gold rose by 0.3%. And looking at bonds, we're looking at Germany's 10-year declining by 2.60%. We're looking at the yield on the 10-year Treasury being a little unchanged by 4.35%, and Britain's 10-year yield declining 2 basis points to about 4.18%. Now, that has been the analysis on the Markets Watch section of financial markets as of today. We're here to see a lot more happening globally and also within our regional financial markets. So it is really important to keep an open eye and also set alerts for many of these points that could directly affect any of these entities that you have invested in. But as we wait to see how today's trading session goes on, we will be gathering more information to give you a more detailed analysis by the start of next week on how these companies are reacting. I have been your host, Victor Chiberu, and we shall meet next week in the next section of financial markets.